We try to take stock of the sell-off that's already occurred, that we've seen tumbling 10% so far this year, for example, like an Nvidia, but we're trading at 26 times future earnings. Are these valuations more attractive yet, or are we still trying to catch a falling knife?
I think we're starting to see the valuations for certain stocks are more attractive. If you think about Nvidia, for example, it's trading significantly cheaper than where it has been for the last couple of years, and it's trading significantly cheaper than other parts of the market like staples while growing much faster. So there's certainly some areas of the market, certainly within tech that have sold off quite a bit over the last couple of weeks. So we think the valuations do look attractive.
Friday's move notwithstanding, but we're still down significantly from all-time highs hit earlier this year on the major indices. Do you think this is the end of the pullback, Tiffany, or is there more room to move lower?
I think we're getting close to the end of the pullback, at least for the short term. So I think, in the near term, we might be able to see a bit of a bounce in the market. But in order for us to see sort of longer-term sustainability of that bounce, I think we need to see some resolution of policy uncertainty right now.
Many wondering when we might get that. And that certainty doesn't seem to be bothering, ultimately, the administration in terms of giving that to the markets, at least. What does, therefore, a long-term investor decide when it comes to China, for example, at the moment, and whether or not you want globally focused stocks or whether you want actually US focused stocks right now?
Yeah, I think you need to focus on the fundamentals of the names. What are the opportunities for the stocks? Certainly within the U.S., outside of the U.S., there's a lot more enthusiasm for stocks that are based in Europe right now. But I think we need to focus on the fundamentals, even with the policy uncertainty, and look through some of this to what the longer-term picture is.
Fundamentals, many would say, haven't changed in the last few weeks, despite the never-ending, ceaseless sell-off. So, from your perspective, has it been just weighed out this sort of volatility? And what fundamentals do you try and focus in on?
Yeah, I think companies are seeing a bit of a change in the fundamentals if we do see tariffs being enacted. Right now, a lot of companies are kind of sitting on their hands for the year, waiting to see what the policies will be and how those might impact their costs for the year. So I think there's a lot of waiting and seeing in terms of companies deciding how to deploy their budgets for the year. But you're right. I think for the most part, the fundamentals haven't changed. What could cause a change in the fundamentals is if we see a very long, drawn-out period of policy uncertainty that leads to lower consumer spending, lower corporate spending, which then impacts economic growth.
Okay, so let's talk a little bit about that, Tiffany, because this administration doesn't seem that bothered about this sell-off. Scott Bessent said as much yesterday, President Trump saying as much the weekend before. Are you confident that this administration can implement these pro-growth policies that it keeps talking about? It's saying to investors essentially, patience, patience. When we figure out tax cuts, when we push those through, when we get companies to start making stuff here in the U.S. again, everything will be fine.
I do think that we see policies out of the administration that are potentially pro-growth and are balancing some of the other policies like higher tariffs that might impact, pricing, inflation, and consumer spending. But again, I think it comes down to the uncertainty around tariffs, DOGE, some of the other policies. And if we can get some certainty, then I think we see a resumption of consumer and corporate spending. And companies, for the most part, have plans on how they would offset tariffs, which might impact some consumer pricing. But overall, I think the consumer is still strong. So I really think it comes down to that uncertainty, which is causing a lot of consumers and corporates to be on hold for the moment.
Okay, so it raises the question of the Federal Reserve and what the Federal Reserve will do this week. Of course, the policy meeting kicking off tomorrow. We'll hear from Jay Powell on Wednesday. What's the needle that he actually has to thread in providing an outlook and communicating for the remainder of the year what Fed policy looks like?
Yeah, I think there's a chance that we see some changes to Fed policy, maybe some lower rates in the second half of the year. But for right now, there's still a lot of indicators that the economy is still strong. And that inflation is, coming down, but is not yet totally tamed. So he certainly has to walk a fine line between acknowledging that we're seeing some signs of things like, higher unemployment rates, maybe some lower consumer spending in the near term. But overall, the key indicators that they look at are still not indicating that it's maybe time for them to move in terms of policy quite yet.
Tiffany, I remember back in November of last year, when we knew the administration was going to be new but hadn't come in, you were articulating how you thought really tariffs are where it's going to be the pressure point for tech, but also regulatory stances. How do you feel that this current administration feels about big tech and ultimately some of the antitrust weight that's on a Meta, on an Alphabet, on a Microsoft?
Yeah, I think it's unclear. We haven't seen a lot of regulatory changes around from this administration. I think one thing we have heard from them is that in terms of things like M&A, they want to make the process a lot smoother for companies. So that may not be helpful for the big tech names, which might be under scrutiny still for any type of M&A. But I think that they are trying to be a little bit more favorable or more helpful for companies that are looking to do any sort of corporate action by at least speeding up the process.